Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Eurodollar. A bearish opening Black Marabozo yesterday after the previous session's indecisive spinning top. The action prompts the idea that the last three sessions may be a three-day bearish evening star pattern, especially as the turn down was at the well-highlighted overhead bright red neckline extension to the very narrow reverse head and shoulders continuation pattern, currently at 104.87, from between mid-November to early December 2025. I should say 2024 there actually. Never mind, get it right one day. We also have the combined February and March 2017 lows at 104.92, near there as well. These resistances had previously capped the market on the closing basis, as they seem to have started doing this here as well. We are nevertheless still fairly close to setting up the conditions for February to become a monthly key reversal. Prices would need to exceed 105.32 to set up those conditions. Now we finished the session closing on the October 2023 low at 104.46. Further overhead, we have the declining mauve medium moving average, currently 105.47, entering the frame. Whilst below we have the short medium moving average, the green one, the short medium moving average currently at 103.97, which doesn't look that strong. And we also have the congestion zone, 103.69 down to 103.32, containing the December 2016 low at 103.49 and the January 2017 low at 103.40. Now so far today, a little lower, below the October 2023 low and slowly approaching the green short medium moving average right now. Cable, aka sterling against the US dollar. A hanging man pattern yesterday after the previous session's third bullish white soldier. Prices once again challenged the nascent two-pointer dark blue upper trend line of the mid-January to mid-February possible ascending wedge pattern, and that's currently 123.64 to 125.94. Opening and closing over it and piercing it, but closing right on it. Coming in a little overhead is the declining mauve medium moving average, currently 126.54, now impacting the market. And just underneath the further overhead September 2020 low at 126.72. A little further higher are the twin 50% Fibonacci lines, the June 2016 to September 2022 move at 126.99 and the October 2023 to September 2024 move at 127.34. Now I say all these resistances because it is increasingly looking like the market is attempting to break higher out of the possible ascending wedge pattern. And I'm considering setting up targets topside for such a break higher as a result. My only concern is that it might be a false break, but we'll have to see on that. Meanwhile, below we have the flatlining green short medium moving average, currently at 124.80, which is within a newish congestion zone between 125 even down to 123.55. And just underneath this is the dark blue lower trend line of the ascending wedge pattern. Now so far today, an initial attempt higher, coming within spitting distance of the declining mauve medium moving average, but backing off before it was properly testing it. US dollar against the Japanese yen. A reactionary bullish piercing line pattern yesterday after the previous session's third bearish black crow and earlier pipe top. Prices bounced up off the dark blue early December 2024 to date uptrend, currently at 151.25, just ahead of the 50% Fibonacci line of the whole of the 2024 move at 150.76. This region was the low 2 weeks ago and is the only obstacle left from the market forming an early December 2024 to date rounded top pattern. I should also point out that the dark blue uptrend is increasingly looking like part of a mid-November 2024 shallow bull channel, with the top side well up in the 160.36 area. Not far above we have the gold long moving average, currently at 152.62, as well as the lesser Fibonacci line at 152.52. Even closer, the combination of the October 22 high at 151.94 and the November 23 high at 151.92. Now looking below, we have the August 1990 high at 151.58, but perhaps more interesting is further down, the 50% Fibonacci line, the July 23 to July 2024 move at 149.61, and this, along with the lesser Fibonacci line at 148.68, would be the ones to watch on the downside. Now, so far today, a reactionary move back down, seemingly capped by the overhead gold long moving average, back below the lows at 151.94 and 151.92, and even testing below the August 1990 high at 151.58, but stopping short of testing the dark blue uptrend further down. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday, and a follow-on from the bullish harami that was almost a hammer pattern. That pattern punched down through the influential dark blue upper trend line, currently at 725.44, of the January to March ascending triangle pattern, but was stopped dead in its tracks by the rising mauve medium moving average, currently 724.5. Further down is the flatlining long moving average, and that's currently at 722.04. Meanwhile, overhead, we have congestion all the way up to the July 2024 high at 731.13, with the short medium moving average in there above, currently at 730.14. There is a possibility to look at the whole late November 2024 today action as a possible double top, Eve and Adam type. Now, so far today, a further follow-on higher towards the short medium moving average overhead. US dollar against the Brazilian real. A very interesting key reversal down yesterday after the previous session's indecisive spinning top. That could also be seen as a reactionary, if small, bullish thrusting pattern. It was the third close below the bright red, May 2024 today uptrend, currently at 572.85. That had been guiding prices higher since the middle of last year. However, the market stopped short of pushing through the next nearby support, which is the rising gold long moving average, below, currently at 567.63, and the lesser Fibonacci line at 565.07. Interestingly, just below this lesser Fibonacci line is target X in the 563.35 zone. And that's the primary target for the drop from the large early October 2024 to mid-January 2025 rising expanding wedge pattern. The harder to reach, much harder to reach, secondary target X1 is down at 541.95. Overhead we have the October 2020 high at 580.70 and then the rising mauve medium moving average, currently 588.17, near the March 2021 high at 588.04. It should be noted that neither of these two were much use as supports on the way down. US dollar against the Mexican peso. A bearish black crow yesterday after the previous session's indecisive doji cross. This was a continuing exploitation of last week's unusual daily key reversal down that closed below what is now the overhead green flatlining short medium moving average. And that's currently at 2041.93. And that had held up the market more or less since late May last year. This seems a more serious move below the green moving average, as each time prior to this week we have prices revert swiftly higher, so just keep a watch out. The market punched down through the combination below of the slowly rising mauve medium moving average, currently at 2024.59, and the bright red lower prospective bull channel line, currently at 2023.42, of the early November 2024 to date shallow bull channel. However, the market did not close below them, choosing instead to close right on them. What happens next at these two supports will be very interesting and may decide the fate of this market for weeks, if not months ahead. Further up, we have congestion at 2057.65, all the way up to the 50% Fibonacci line, the April 2020 to April 24 move at 2099.90. Meanwhile, below, we have support from the October 22 high at 2017.20, the August 24 high at 2004.45, and the congestion band between 1987.96 and 1991.31, containing the December 22 high at 1991.31. So far today, well, not much, with the market either side of the combination of the mauve medium moving average and the bright red lower bull channel line.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.